Let's take a look now at the day's market news. Trading on the JSE has still not started due to large corporate actions, including a record day of value traded in equities that resulted in the JSE experiencing significant delays in processing these trades on some of its systems. The rand continues to rally amid a weaker dollar. But for more on these and other business stories, we're joined now by Mia Kruger, who's Director of Research and Fund Management at Kruger International. Good to have you with us once again, Ms. Kruger. Now, trading on the JSE has still not started. What's happening on that front?
Yes, I mean, we've expected it to start a little bit earlier. We have heard this morning from the JSE that they've had an unprecedented amount of transactions that they had to deal with and had to capture, which is a clear indication that their systems could not deal with the volumes we saw yesterday. The main reason for these large volumes of over 145 billion rand traded in one day is due to the Naspers process corporate action, where people, shareholders in these companies, could elect to exchange Naspers shares for process shares, which in effect then decreases the amount of Naspers shares available for trading on the JSE and increases the amount of process shares available for trading on the JSE. So that seems like the main reason for the hold-up this morning on the JSE.
And what, Mia, is behind this exchange of shares? What are the elements that have led to this market movement?
Okay, the exchange between the two shares is a corporate action that was issued by Naspers in process, where shareholders could elect to give up some of their Naspers shares in exchange for a larger holding of process shares. This would increase the free float in process shares, which would also help on the Amsterdam Stock Exchange for the share to be included in more indices there, the Euro Top 50, for instance, and would also help the liquidity in the process shares globally. So from a shareholder perspective, if you elected to give up some of your Naspers shares in exchange for process shares, you effectively have a larger exposure to a company that's secondary listed in South Africa, and that the majority of the assets held by process is still Tencent, as we know, and then all other technology businesses of Naspers. But in event, they also hold a big stake in Naspers. So it's quite a complicated structure to explain in a short conversation.
And historically, has this happened before as far as the Johannesburg Stock Exchange delaying trade?
Well, the JSE, as most markets globally, have delayed trade for various reasons. It's definitely not the norm, and it's something that occurs very infrequently, and it is not something that any exchange wants to happen on the exchange, because it just shows that it's not a open market that can be traded at any time, which influences liquidity and influences the revenue of that company at the end of the day.
So let's move on now to Stats SA. According to them, South Africa's annual consumer price inflation was 4.6%, and this was in July of 2021, which is down from 4.9% in June of the same year. The index increased by 1.1% in July of 2021. Talk us through the main factors driving this data.
Yes, so the month-on-month increase of 1.1% was actually driven by the increase, majority driven by the increase in electricity prices. It was to be expected. Most analysts anticipated this number to be higher. So the year-on-year number came down slightly due to various factors. But some of the drivers of the inflation rate, as we see it currently, part of the 1.1% increase of this month, is definitely the fact that the food price inflation remains higher than we initially anticipated a couple of months ago. And we expect the petrol price increases of the last while to be reflected in the next coming increase in inflation rate. We have expected the inflation rate locally to increase sort of to 5% for the year towards the end of the year. And I don't think that the Reserve Bank will be worried if they see some upward pressure in the interest or in the CPI numbers in the coming months.
Our retail trade sales are for June are due later on today. What can we expect from those figures?
Yes, so the June retail sales in line with analyst expectations. was still lower. It was 7.5% lower than for June than the previous month. One of the main reasons we think that this number is lower is the fact that we were still in a level 3 lockdown. Consumers were able to sell more, but we haven't seen a lot of consumer appetite due to the fact that people have put off the consumption of consumer goods that they don't really need very urgently, and also because people in South Africa's income are under significant pressure.
Now, DRD Gold announced a year-on-year increase of between 94% and 114% in earnings per share. Can you take us through those numbers?
Yes, so they're expecting a 26% increase in their earnings per share. That was predominantly due to the fact that they've received a higher gold price. The gold price compared to the 6 months in the previous year was 20% higher. We saw quite a strong gold price movement last year, which helped it to get to the level that we saw for the first 6 months this year. They also had an increase in production of about 7%, which helped them in that state as well. So all in all, an increase in production and price for them is a very successful earnings season. And then, of course, this company sits in a great position where they're debt-free, and they've got a very strong balance sheet with 2.18 billion rands in cash at the moment.
Mia Kruger, thank you once again for today's market update. That's Mia Kruger. She's Director of Research and Fund Management at Kruger International.